Hello, everyone, and welcome into CrushTheStreet.com. We got a really interesting guest today. His name is Ian Balina, and he's somebody who is out there educating people on how to make some money hacking the system. In fact, his YouTube channel is Hacking the System, and he's talking about really making millions of dollars today and how to do that really with cryptocurrencies. And he's got a lot of tidbits and things that he's suggested, which I recommend everyone visit him at his YouTube channel and also his website, ianbalina.com. So we're going to pick his brain here today. Ian, thanks for coming on the show with me.
Oh, thanks for having me. It's a pleasure.
Well, let's start off by way of getting to know you. What are your thoughts on Bitcoin? How did you get involved with cryptocurrency in general?
All right, so great question. So by day, I work at IBM. I'm in enterprise sales at IBM. And I had a buddy of mine from college basically bugged me for about a month, trying to get me to introduce him to the director of blockchain at IBM. And I was like, why do you care so much about this blockchain stuff, right? So he's like, I began this Bitcoin crypto hedge fund, and I'm doing this different types of blockchain projects, and I met him at a conference, and I've been trying to hunt him down ever since then. So I'm like, all right, cool, because me being on the inside of IBM, I basically have all these people's contact information. So I'm like, all right, cool, here's his contact, have at it. But I was like, hey, just answer me this question, though. How much money are you making from this crypto stuff? Because you're basically my age. What are you doing starting a cryptocurrency hedge fund? So he told me he made 200% in the last year or so from investing in Bitcoin and cryptos like Ethereum. And I was just blown away, right? Because in traditional investing, getting a 20% is mind-boggling, right? 20% is good. So for somebody to get triple-digit returns, and this guy wasn't a hedge fund professional. He was just a regular dude, right? To a point, I'm like, you know what, this is interesting. So last year, I began testing the waters in cryptos. I bought some Bitcoin, bought some Ethereum, just kind of test the water out. And I had 25% return in the first month. So I'm like, okay, this stuff is pretty legit. The next month, it was like 30%. Then I caught Ethereum from $10 to $40. That's when I became a believer in cryptos. That was my coming to Jesus moment. I'm like, you know what, this is life-changing. Right? So ever since then, I began dumping money into cryptos, and now it's kind of become almost my full-time side hustle, and soon, eventually, probably will become my full-time job, just doing this full-time.
That's really exciting, Ian. In 2011, Bitcoin was monopoly money, right? And 2013, it was just extreme speculation. 2014, 2015, everyone forgot about it. But 2017, cryptocurrency solidified itself as the future. And you're talking about hedge funds and institutional money. And I've been saying that 2018 will be the year that cryptocurrency becomes an asset class. And maybe that's already happening, where the big money really starts to enter it, and we see it go into the $1 trillion total market cap. And I know it's going that direction. But so we're doing this interview, and here we are with Bitcoin at nearly an all-time high. It's essentially all-time high. I'm saying that a lot nowadays.
Oh, it did, yeah.
So
it's all-time high. It's at like 3,400, 3,500.
It's crazy.
Yeah,
so let's just kind of get your thoughts in general terms with Bitcoin before we get into some of these other ICOs. Where are we headed with Bitcoin, in your opinion? Because a lot of people say that, hey, it's not really finite. We know that there's only 21 million, but we just had a hard fork, right? And technically we can keep splitting it up. And then there's all the other ones. And if you reduce it down to what it essentially is, there's really nothing backing it. You can't wear it around your neck like you would a jewelry piece or a piece of gold or a piece of silver, right? Or industrial use. So just let's get your initial thoughts and the trajectory of Bitcoin and your confidence in it long term.
All right, so long term, I'm very, very bullish on Bitcoin. I don't think it's going away anytime soon. I think Bitcoin is here to last, whether people like that or not. Now, with that being said, though, I don't think it will be the biggest currency down the line, Right? I think Bitcoin has already won a use case of basically currency and money, right? Digital currency. But there are other different use cases out there for other things on blockchains, right? For example, Ethereum has the ICO use case. Ethereum has the use cases for decentralized applications, right? So Bitcoin will become just one of many different currencies. And actually, I think Bitcoin in the next year or so will be displaced by Ethereum. Because if you actually look at the daily trading value, not just the market cap, but the daily trading value, for the last, I would say 3 or 4 months, Ethereum has been number one, going back and forth between Bitcoin, right? So Ethereum is basically on a steady climb up, and I think it's eventually going to surpass Bitcoin. But now, just kind of keep things on Bitcoin. Bitcoin has value, right? Bitcoin, I mean, because things like fiat has no value really. Fiat has value in the sense that the government says it will back it, and they'll insure your money to a particular amount, right? But Bitcoin has value because, especially in places like the developing world, where people have uncertainty around their money, right? Where there's dictatorships, government. For example, India recently, I believe, devalued their currency. Their bank just said, okay, all this currency we have is pretty much worthless because we're changing the rules. And people were out of luck because they had no control of their money. Bitcoin is changing things and disrupting things by giving people control of their money. The money is theirs, right? So, for example, in I think between 2018 and 2013, different countries like Cyprus went through this disaster with the economy, to a point that the banks were seizing people's assets. Right, the government would go to people's bank accounts and take their money, and basically try to share that money across the entire country of the populace, even though it was their hard-earned money, right? So Bitcoin, in a way, is a hedge against things like that. It's a way to protect yourself from banks seizing your assets, from privacy, from even just freedom, right? Because, for example, girls in Pakistan, right? Let's say there's a girl in Pakistan, they can't have bank accounts because they're female, but they can earn Bitcoin online. Right, so there's so many different use cases that I don't think this is going away anytime soon. Long term, Bitcoin is here to stay. It may not completely dominate the entire landscape. What I picture is having other altcoins, which stands for alternative coins, basically fulfill multiple use cases. So it won't be just Bitcoin.
Yeah, and for everyone who assumes that it's just going to be, one or the other, look at companies in general, right? Look at these tech companies. There was a huge tech boom in the early 2000s, but a lot of them went away. But there were a few that rose to the top, and it's not necessarily that Bitcoin needs to be at the top or number 2, but even if it is number 5, let's just say that, it can still grow over time and be the Amazon or the Coca-Cola of the cryptocurrency money use case, right? So that's something that I think Bitcoin is continuing to show itself to be resilient, especially through all this scaling debate. It continues to thrive, which I think is saying a lot. Okay, so let's get into some of these altcoins, this ICOs, and specifically in regards to companies trying to raise money. ICO sounds like an IPO, except the difference is in an IPO, you actually get equity. In an ICO, you are just getting a token. And you're not necessarily getting a token that's tied to the revenues of a company. And it's the Wild West out there right now. And a lot of money is being made, but at the same time, there's a lot of uncertainty. And so let's just start off with your general thoughts on that.
I think I'll basically just say this: what a time to be alive, right? Right now, like as I mentioned in the videos, right, we're in the greatest transfer of wealth in human history, right? So this is actually a quote from, I believe, Tai Zen on YouTube. But never have we seen a time where anybody, the average person, has access to changing their lives so drastically from relatively little investments over a short period of time. Right? And I think ICOs are really the best asset class, if you're trying to call it that, to invest in cryptos, right? And to have your entire life just changed almost over 1 year, 2 years, or even 3 years, right? So ICOs basically let people or let companies raise money in exchange for tokens, right? So one of the biggest ICOs was Ethereum. So people gave Ethereum money before they even had anything. It was just a pure white paper. They gave them money in exchange for these tokens. And the tokens, it's almost kind of like speculating, because people expect the value of that token to increase in time as that project becomes more successful. Even though that token may not necessarily be tied to that project, they expect that if this project is successful, this token will have more value. Now, with the entire SEC memo that came out and all these regulations, projects now are definitely trying to make certain that their tokens have utility and they're actually they're actually used on their project. So, for example, with Ethereum, it's able to do that in the sense that you have to pay Ether as gas for the transaction cost on their network, right? So for every application on there that's running on top of their network, it has to pay Ether. So all these different products are basically doing the same thing. They're creating utility with their tokens, some not so much. And some people say it's a wild, wild west. I say that's a good thing, because lots of volatility is good, because that's where money is made. So for me as an investor, I'm in crypto because it's volatile, because that's where you have the drastic swings. Like, for example, today I'm actually in a swing trade that's up 80% in basically 1 day. All right, so you don't really get that in the regular traditional capital markets, right? Like, imagine buying Walmart and getting an 80% return. Right, so
it's unheard of.
Yeah, so cryptos is really the best way to do that, and I think ICOs are the best way to get there initially, right? Because you're basically buying a token at its possible cheapest price.
All righty, Ian. So we're still very early in this, and these companies that are issuing these ICOs, as far as the market is concerned, it's still too early to say that we've nailed down the ideal source code that should be used going forward, right? There's just so many different ICOs out there, so many different tokens, and not many people like that. Many of them are pre-mined or very centralized. And do you see this getting nailed down over time as we progress, that, hey, we are going to really nail down, and the market's going to say this is the type of token we will go forward using in future ICOs?
In terms of the actual token?
Yeah, well, in terms of the source code, the type of token, some sort of technology that people can trust in, because right now each one is so different. Because you can say that I trust the project or I trust the business, but you don't know necessarily about the token that they're going to use, the code behind it. And a lot of people trust Bitcoin because it's been around for a long time.
Right. So in terms of the projects or the networks, we're still in the infancy stage. Now, there are some clear winners, right? For the most part, the top two, Bitcoin and Ethereum, are the primary projects where products are being forked off of. But right now, I think in terms of other tokens, I think the clear standard, I would say the clear standard right now is Ethereum, in the sense that most ICOs, I'm not sure what the actual percentage is, but my guess would be over 70% of the ICOs right now are working or running their ICO or their tokens on the Ethereum blockchain. Right? So actually, Ethereum has made a standard called the ERC20 token, which is basically a common standard that any Ethereum project or project or dApp, right, or application can use. Right? So all these different ICOs, for example, Civic and EOS and all these different ICOs, when they create tokens, they're actually creating tokens that are compatible based on the ERC20 standard, meaning that it's easier for other exchanges to trade these tokens because they all have an agreed upon number of different rules that they all follow. Right? So in terms of the actual code, the code is pretty straightforward. It's basically the same if they all abide by this common standard called ERC20 token. So that's the first standard that's really getting some, I would say, mainstream adoption in the token in the ICO marketplace. Now, outside of that, most projects, though, they're still in the infancy. They haven't really competed or come close to Ethereum when it comes to creating tokens.
Well, that is a good point that you bring up. The market is providing a way for people to be able to semi-trust some of these new tokens out there, which is a good point. So, okay, so lots of different uses for blockchain. Right now, we're so used to it having it associated to some sort of speculative component, right? We buy a token and it goes up and down, and that's what you do. That's what you love. You love making money on the blockchain. But let's talk about some of the other uses for blockchain. Do you see this as an opportunity for a lot of technology to go in many different directions?
Yeah, I mean, so blockchain is being integrated into almost every field of technology, from healthcare to food to law. I was actually at an event where they're working with law and blockchain, right? So blockchain is becoming, I think it's one of the best innovations since the internet itself, right? As most people say in this space. This is why people are so bullish on this space, because it's truly a disruptive technology. Being able to have two parties interact without having a central authority or middle person, right? So being able to interact peer-to-peer in a purely decentralized and trustless manner, right? So I think having that can be applied in any field. Any field can be disrupted. So for example, I have a buddy of mine, he works in crowdfunding, and even their field is getting disrupted. And their field is pretty brand new, right? Because their field, crowdfunding, like the Kickstarter and stuff, right? That came about after the Jobs Act, and that was relatively pretty recently. But even that is being disrupted by blockchain. So if things like that are brand new are being disrupted, then definitely all the old industries are being disrupted, from shipping to mining to retail, right? So there's no industry that's immune to having this technology improve that industry.
Yeah, I agree with you wholeheartedly on that. So is there a way to use blockchain and separate it from the token, the monetary component, or do you need that to give the miners incentive and for it to be decentralized?
Yes and no. So yes, in a sense, yeah, there are definitely blockchain projects that don't do ICOs, don't have pre-mining, especially, for example, with me, right? I work at IBM. When I work with Fortune 500 companies, they don't care about tokens or ICOs. Right? They just want to have their blockchain and have this for the customers or whatever product they're trying to build. So these are more what are called private blockchains, right? So those are definitely available, from the Hyperledger to even Ethereum and so forth with the Ethereum Enterprise Alliance. So yes, it's possible to have a blockchain without having a token. But I would say the tokens are more for those publicly facing blockchain projects that aren't really being done by a company. Maybe they're just being done by a startup or whatever, or a foundation. And they're trying to incentivize people to basically help the network grow faster at a larger scale, and also have a greater community. Because game theory economics play a factor in terms of getting people to actually do what you want them to do on the blockchain. Because otherwise, people can just turn off the blockchain and nobody's transactions will go through, right? So, for example, with miners, they get paid, right? They basically have that incentive to host their nodes because they're earning money, right? So all these different incentives, I think most projects should have them, especially if you're doing a public project. But if you're doing a private-facing project, then no, you can have a blockchain without tokens.
So Ian, what is that's interesting. I've never heard of a private blockchain before. So what does a private blockchain look like, and how does it work? How is it incentivized to be trusted? If you know what I mean, because that's the whole point of why we like the blockchain, is that, you know, it's decentralized, it can be trusted. How do you make it private, and then how do you make it secure?
I mean, so private in the sense that it's internal to a company, right? So, for example, let's say a customer like Tiffany's has different diamonds they want to keep or store on a blockchain and log for their internal records, right? Or maybe they want to work with their business partners, right? So it's more like kind of like a trusted network of people on a blockchain, right? So it's not publicly available to somebody to go on GitHub or to go on some search engine and find that blockchain is internal to the company, kind of like an intranet, right? So you have the internet and you have the internet inside a company. So you can have private blockchains inside a company or inside a trusted network. Okay.
So, and then I guess it would just be for the purpose of the company, so the company would support the network then, right? And then
Right.
there
Yes,
would
sir.
be, I'm just wondering how that would go about being secured and to a trustworthy degree that we, let's say, trust Bitcoin. And so I guess the company would fund it then too, right? They would be paying for the network, right? Out of their own revenues. Is that fair to say? Or it wouldn't necessarily come out of the blockchain as this like self-fulfilling thing like we have with Bitcoin, right?
I mean, so this is kind of where it gets too technical, but in the sense that they don't really have to fund it per se, right? You can have a blockchain. You just have to have, for example, let's say it's a node, it's a proof of staking or a proof of mining blockchain, right? Regardless of what it is, right? The company just has to have different nodes being able to facilitate the network and to facilitate transactions on the blockchain, right? So these nodes could be internal to the company. Maybe it's just a company and their customers. Maybe it's just a company and their business partners, right? So in the sense that that's what I mean by private. So for example, there's Ripple, right? Ripple is known as a private blockchain. Ripple works with the banks. That's why some people give it flack. All the crypto anarchists give it flack for that. But they don't really care because they have their own trusted network, which are other banks across the world. Right? So those other banks work with each other on this blockchain and basically have their nodes, I believe, and they go through and talk with each other and send money worldwide at a much faster scale than even sending money with a regular bank transfer or getting on a plane and sending money, right? Because having their own blockchain makes them have the same capabilities of a blockchain without really having that public access. Right, so so the code is basically internal to them and their network.
Well, I mean, it's all interesting stuff, and I know a lot of people are really saying that, hey, this is going to be the future. I am one of them, and I think it's really fascinating where this is all going to go, and I think we're just barely scratching the surface as to where it will go, because it's still so new, and I feel like there's going to be people out there that expose new areas that we enter which nobody was conceiving. So all really good stuff. So Ian Balina, Ian, I want to let you know that I'm very grateful that you came on the show, and if people want to learn more about what you're doing and what they can get if they visit your work, please let them know.
Yeah, so I have a website, ianbalina.com. That's IANBALINA.com, where I just kind of share my journey. I'm basically documenting my process through investing in cryptos, through initial coin offerings, through trading, swing trades, sometimes day trading. Right? And I just document the entire process. So I have a YouTube channel where I actually document my process to evaluating companies to invest in during the ICO stage, right? Because there's so many different companies. There's almost a ICO, there are probably like 3 or 4 ICOs every single day now, right? So how do you filter out all that noise? So on my YouTube channel, I basically show how I do that through my entire process. I share my spreadsheet that's kind of become famous now because I use that to predict different ICOs to invest in, and I share everything publicly. I'm trying to be transparent. I tweet my trades, I post my trades on Instagram, and I share my portfolio every single day, the ups and the downs, the wins and the losses. And that's kind of how I've been able to grow an authentic following, is because I'm also authentic as well.
Good deal. All right, Ian. Well, hey, thanks for coming on the show with me today. And if anyone wants to visit your work, we'll be sure to have the links in the description area.
All right, thanks for having me.